Hi, in today's video, I'm going to be talking about order blocks. So what are order blocks? Order blocks are zones in the market where institutional limit orders are being placed. So in today's video, we are going to be talking about order blocks and how to identify them, how to spot them, and how to use them to trade in the market. Trading is a skill you have to learn. So I'm an SMC trader. I trade with order blocks. I trade with market structure. I trade with inducement. So all these conferences, I'm going to be talking about them one by one. But in today's video, we are just going to be talking about order blocks. So now, how to identify an order block and what is an order block? Other blocks are zone markets where institutional limit orders are being placed, like hedge funds, big banks, companies place their pending order. So, as a SMC trader, what we do is we trade exactly like the big guys, which is called the smart money concept. That's why they put the word smart money concept, because we trade like the big guys. Where they put their pending orders, that is where we put our pending orders too. So what you're going to be doing is look for ways to buy that market whenever you see an order block. So in this video, I'm going to be showing you how to identify an order block. So stay tuned. Let's dive into right into it. So if the market is going up, for example, this market is going up like this. So when a order block will form is when markets break structure. Okay. If market breaks structure, there will be an order block below your entry. Okay. Don't just jump into market, oh, because market breaks structure. The rules of SMC is that market must break a structure. So in any trade, if market breaks structure, just notice that your order block is below your break of structure. Don't forget, like this market break structure already from here. This place market have taken out this place. So what you do, wait for a retest for market to come and hit that place. So what? So now market has broken structure from there right now. So your order block, don't forget that your order block is going to be from where? Here, below here. So your order block is going to be below there. The reason why your order block is here is because market just breaks structure. Okay, immediately market breaks structure, market is giving you opportunity what to join that trend. Market is giving you opportunity to buy that market. So if market gives you opportunities like this, you will spot an order block after your break of structure. That is it. After a break of structure, your order block is not far from your break of structure. In our next video, we are going to be talking about break of structure and how break of structure really work, the definition of break of structure and other things. But in this video, it's just order block. So in this video, you can see that market has already breaking structure. So what you look for is mark out your break of structure from here. Good. After marking out your break of structure, if you are a SMC trader, you will notice that there must be a liquidity above your order block. There must be a liquidity above your order block. So immediately market creates an order block. What will you do? You look for what? You look for liquidity protecting that your order block to make sure that that order block is valid. And don't forget, we have valid order block and invalid order block. So you need to know which one you are picking. Picking the wrong order block can also lead to a bad trade. Picking the right one can lead to a good trade. Why? Most of the times you can pick an order block and markets can still break you out and markets will still not tap you in. That's miss entry. But picking the right order block is very, very important. That is the reason why if you want to do your analysis, you start from the daily time frame to the lower time frame so that you know what the order blocks really is. You can mark your order block from a higher time frame and also a lower time frame, but most importantly, you mark it on your entry time frame. marking your order block from your entry time frame is most important. So in this video, I'm going to be showing you how to mark your order block from the higher time frame to the lower time frame. What time frame is good to use as an order block? I'm going to be explaining everything step by step. So now don't forget that your order block must be below your break of structure, which I just did. Now this is my order block and this is what my break of structure. So now my order block is below my break of structure, and don't forget that there must be liquidity in. So now this one is representing the liquidity. So what you will do is you wait for market to sweep that liquidity, tap into your order block and start moving on. So that is what you are going to do. So I'm going to be showing you on the chart how the market looks like, and also how other blocks looks like, so you can easily identify them from your higher time frame to your lower time frame. So let's go. So now if you can see here, other blocks had many. There are many multiple other blocks. So which one are you going to choose? Multiple other blocks, but you need to pick just one for your entry. So for example, now other block is the last red candle before an impulsive move to the upside. That's for a buy. Then for a sell, for example, this one now, my chart is black and purple. So the black is for what? Is sell, while the purple is for buy. So I'm going to be using this one as an example. This is a bullish order block I want to show you. I will show you for a bearish, but this particular one is for a what? A bullish trend. So in this order, in this place here, you can notice that this black candle here, just follow this my blue dots. Follow the blue dots. I'm going to explain everything through the blue dots. So now this black candle here before an impulsive move to the upside is your what? Your order block. How can you identify an order block? The last red candle before an impulsive move to the upside is your what? Your order block as a bullish order block. So I'm going to be marking the order block from here. This candle here, this candle here is a what? Is a bullish candle, is a bullish order block to the upside. So what I'm currently looking at here, like I said on this thing, market has to what? Break structure. And if you look here, market breaks structure from here. Market breaks structure from here, and you notice that as market breaks structure from there, markets create an order block. So after the break of structure produce what? The order block. Your break of structure is above, your order block is not far from your what? Your break of structure. So if you can see here now, market break structure and the order block is not far from my what? My break of structure. Please, if it's a buy order block, your order block should be what? Below. If it's a sell order block, your order block should be what? Above. For example, now this order block I'm marking here, this order block I just marked is below here, right? This other block is below here. So now this is the other block I'm taking for a what? For a buy. You notice that the other block is below. But if it's for a sell, your other block is what? Above. So here I'm going to be putting here, like I said, there must be liquidity protecting your other block. And don't forget that this is the liquidity. I want market to sweep here before tapping into my zone. You see how I'll put my entry, and if you're putting your entry should be on top of your order block. And also the tools you need to use, there are tools to all these things. So if you want to mark your order block, you use this box here. This box, this is what you use as your order block. This box here, this is what you use as your order block. Then if you want to mark your trend line, you use a trend line tools. So in our next video, I'm going to be telling you the tools you need to use to mark your what? Your order blocks, break of structure, market structure shift, and stuff like that. But in this video, I will show you how to mark your what? Your order block. So now you notice that there is liquidity above my entry. Just follow the blue dots, guys. So now here, this order block now is for a buy. So now I'm going to also show you an order block for a sell. I'm also going to show you an order an invalid order block and a valid order block. You notice that this order block now, nothing has tapped into it, is a valid one because nothing has tapped into it, is not touched, is not mitigated, is clear and clean. So if market is coming to do something like this, market to come down, tap here and start moving up. That is what I want in this market. So if as a SMT trader, you are using what? An order block. An order block is your point of interest, which is also your POI. It's short from POI. So now this order block now will identify your entry. So if market tap that order block, is going to what? Trigger you into the market. So now immediately market tap this order block, my market is going to what? Move to that place. So I'm going to be showing you another example of an order block but for a sell. You this thing now. If market wants to for a sell, is from where? Above. So it's from what? From the upside. For example now, like I said, it's the same thing. Just what? Mark your break. Immediately market break structure, your other block is not far from your what? From your break or structure. Your other block is not far from your what? Your break or structure. Immediately market break structure. For example, market has taken out this low, which is a break of structure, right? Market has taken out this low, which is a break of structure, a clear break of structure. Then your sell order block is above, somewhere here like this. Your sell order block is what? Is above. So if market break structure, look for your order block above. Okay, so this particular one is for a sell. This particular one is for a sell. For a sell order block, the last green candle before an impulsive move to the downside is what? Your order block for a sell. I will repeat myself. The last green candle before an impulsive move to the downside is your order block for a what? A sell. But why for a buy? The last red candle before an impulsive move to the upside is your what? Your order block for a buy. So now I'm going to be showing you examples of a bearish order block. Example of a bearish order block. For example now. Okay, I'm going to be showing you on my chart. I'm looking for a sell. Okay, for example, this is very clear. So now this order block right here, the purple order block before the impulsive move to downside is your what? Your order block. So now this is an order block. This is a clear order block. What? This is a clear sell order block. Like I said, if it's for a sell, your order block should be what? Above. If it's for a buy, your order block should be what? Below. Don't mix them, because most of the times you would think that, oh, it's an order block, but you don't know if it's for a buy or it's for a sell. But this particular one I'm showing you is for a what? Is for a buy. Sorry, this particular one I'm showing you is for a sell. So now this other block, now what I will wait for is market to what? For market to tap in. So now this market take out this low. Like I said, market break structure, and your other block is not far from your what? Your break of structure. So now this is an order block to sell. So if I want to sell this market from here, what I'm going to do is I'm going to mark out my liquidity. Like I will be taking all year as liquidity that market has to sweep. Market has to sweep all this liquidity and tap into my zone for a what? For a sell. So now, like I said, I'm going to be putting my order block what? Above here. I'm going to be putting my order block what? Above. Say, I'm going to be putting my order block in that box. Okay, I'm going to be putting my order block in that box so markets can easily tap me in. Okay, so now this is the analysis for into it. So now this is for a sell, and now, like I said, is valid and invalid order block. Valid and invalid order block. So if you're, let me show you an invalid order block. An invalid order block are order block that has been mitigated by the market. An invalid order block are order blocks that have been tapped, that market has touched in the market. Okay, those are invalid order block. Then why valid order blocks are order blocks that have not been tapped by the market, that have not been mitigated in the market. Most of the times order blocks will tap once, come back again, tap twice, come back again. If it's coming back the second or the third time, is breaking it. So that order block is what? Invalid. Most of the times, first traders will pick the invalid order block and markets will take them out, and they will be asking themselves why. Is because of your order block is an invalid order block. So in this video, I'm going to be showing you how to mark an invalid order block and a valid order block so you can understand the difference. So now, for example, this is a valid order block for a what? For a buy. This is a very valid order block for a buy. Do you know why? Because market has not tapped into it. This order block is clear and clean. Is clear and clean. That's why this thing is what? Valid. But if market has not tapped into it, if market has tapped into it before, is what? Invalid. If market is coming back, market is either sweeping you out from that trade. So what you're going to do is pick a valid one. And most of the times, even if you pick the valid ones, market sometimes will misbehave and still take you out, because we're not the ones controlling the market. Sometimes it's like that, but it's not that you make it get to you. So now this is a valid order block. And also, if your order block is too big, if your order block is too big on your entry time frame, like that particular candle is too long for your entry time frame, go to a lower time frame. Like my entry time frame is 15 minutes. If my order block on the 15 minutes is too big, I'll go down to my lower time frame, which is 5 minutes, and take a 5 minutes order block to adjust it, because your order block determines your stop loss and your what? Entry. So if you take a bigger order block, your stop loss will be so wide. To make it more tiny, go to your what? 5 minutes. Now I've come to my 5 minute time frame. Now I'm in my 5 minute time frame currently. So now what I'm going to do is I'm going to shift this my order block and take a 5 minute order block. And you notice that a 5 minute order block is more smaller. You see how small it is. You see how the order block is very, very small. So now if I want to put my entry now, it won't be that big. Now I can adjust it a little bit. Now my stop loss will be not, my stop loss will not be too big. So now I'm just going to adjust this and measure this to any length I want. Some people are taking it to 50, some people are taking it to 25, but me, I just do 1:3. 1:3. The reason why I'm doing 1:3 is because I'm not the owner of the market. My dad is not the owner of the market. So I have to take what I can afford to lose and leave that market alone. Because if I want to target market can decide to come back and take me out. So I have to be careful. So now this is the small order block in a lower time frame. So if your order block is too big, go to your what? To your lower time frame and take a smaller order block. So now let's go to a sell order block and see something. Let me go to 1 hour. Let me go to 4 hours. So now a sell order block is what I'm looking for. I want to show you examples of how to identify a sell order block and a buy order block. I've showed you how to identify a buy order block and a valid order block, but I've not shown you how to identify a sell order block and a valid sell order block. So let's dive into it. So now this, like I said, like I said like this one now, market has tapped into this order block, right? What? The sell order block. And in what you notice is market tapped this order block. What do you see? Market started selling. Market sell till this point right here. Immediately market sell till this point right here. So now, so to show you that the order blocks are very, very important zones in the market. So now, immediately, this is a sell order block. Okay, this is a sell order block. And let me move these things a little bit so you can see the order block. Let me zoom in out very well. You can see that this purple candle here is the order block. But if you're using red and green candle, this candle is the what? A green candle. a green candle, the purple candle is a green candle. If you're using how to identify a what, a sell order block. So if you don't know how to identify a sell order block, this is how to identify a sell order block. And I'm also going to show you valid and invalid order block to know about. So now, for example, this market, let me look for invalid order block for you. This is an invalid order block. This one right here is an invalid order block. The reason why I say market is an invalid order block is because market has already tapped into it before. So if market is coming back, you notice that immediately markets let me this one immediately markets tap into this place before and sell to the downside. You want to use that same order block again. Okay, you're going to look for a new one. Immediately you notice market was coming back. Immediately market came back, market broke it. Market break down order block because it's an invalid order block. Market has used it before to sell. Why are you still going to take it again as an order block? Market what break it, and this is what he did. He break this place. He break it immediately, break it and still come back for a retest. Okay, so if you see that market has touched that order block, don't take that market again. If you see that market has used it before to sell or to buy, don't take it. It's an invalid order block. If you see a candle inside that your order block, is an invalid order block. Okay, so know how to identify a valid order block and invalid order block so that you know which one that is valid and invalid. So guys, this is all for today. I'm going to be talking about inducement in my next video. So if you like videos like this, don't forget to like, subscribe to this channel.